Alright, let me break down the features of the HP 10-bit plus financial calculator for you in a more conversational style. First off, we've got the time value of money functions. This is a big deal in finance. You can calculate loan payments, which is super handy when you're figuring out mortgages or other types of loans. It also helps you work with interest rates, so you can see how they affect your investments or debts. And don't forget about amortization, it's great for seeing how your loan balance changes over time. Next up is cash flow analysis. This calculator can handle up to 32 uneven cash flows. That's pretty impressive for a handheld device. It's perfect for analyzing investments or projects where the money coming in or out isn't the same every period. Then we've got statistical functions. This includes probability distributions, which can be useful for risk analysis. There are also regression options, which help you spot trends and make predictions based on your data. Last but not least, there's the easy-to-use interface. They've designed the keyboard layout to be really intuitive, so you're not fumbling around trying to find the right buttons. And they've set it up so you can do most calculations with minimal keystrokes. That's a real time saver when you're crunching numbers all day. All in all, it's a pretty powerful little tool, especially for financial professionals or students studying finance or business. This mind map organizes the key features of the HP 10-bit plus financial calculator into 4 main branches: time value of money, cash flow analysis, statistical functions, and easy-to-use interface. Each branch is further broken down into specific capabilities or characteristics, providing a clear and concise overview of the calculator's functionality. H. Table swipe up, logo start 16 to 9, RT, demo. H. Calculating net present value, NPV, and internal rate of return, IRR, using the HP 10-bit plus calculator is extremely useful for commercial real estate, CRE, professionals. Here's how to perform these calculations. Calculating NPV and IRR. Clear the calculator's memory, press Shift, C or, set payments per year, press 1, Shift, P/E. For annual cash flows, enter cash flows, initial investment, as a negative number, enter amount, press +/, then, CFJ, for each subsequent cash flow, enter amount, press CFJ, if a cash flow repeats, enter number of repetitions, press NJ. For NPV calculation, enter the discount rate, input rate, press I/, calculate NPV, press Shift, NPV. For IRR calculation, press Shift, IRR/. CRE example. Let's consider a commercial property investment. Initial cost, $1 million. Projected annual net operating income, year 1, $80,000. Year 2, $85,000. Years 3, 5, $90,000 each. Estimated sale price at end of year 5, $1,200,000. Required rate of return, 8%. Calculation steps, Shift, C or, 1, Shift, P/, 1 million, +/, CFJ, 80,000, CFJ, 85,000, CFJ, 90,000, CFJ, 3, NJ, 1,290,000, CFJ, year 5. NOI plus sale price, for NPV, 8, I/, then, Shift, NPV, for IRR, Shift, IRR/. Applications in CRE investment analysis. Compare different property investments by calculating their NPVs. Development projects. Evaluate the feasibility of development projects by analyzing projected cash flows. Acquisition decisions. Determine if the property's purchase price is justified based on projected cash flows and terminal value. Lease versus buy analysis. Compare the NPV of leasing versus buying a commercial property. Renovation ROI. Assess the potential return on investment for property improvements or renovations. Portfolio management. Evaluate the performance of individual properties within a larger portfolio. Financing decisions. Compare different financing options by calculating the NPV of each scenario. Risk assessment. Use IRR to gauge the potential return of a project and compare it to the required rate of return. Remember, while NPV gives you the absolute value added by an investment, IRR provides the annualized percentage return. In CRE, it's often beneficial to consider both metrics when making investment decisions. Objective: calculate net present value, NPV, and internal rate of return, IRR, using the HP 10-bit 2 Plus calculator. Key points: the procedure differs slightly from other calculators, such as the HP 12C or TBA 2 Plus. Example scenario: initial cost, $100,000. Cash flows, $25,000, $35,000, $40,000, $50,000. Weighted average cost of capital, WACC, 12%. Steps to calculate NPV. Clear workspace, press the function key, rust-colored, and see all to clear the calculator's memory. Enter cash flows, input -$100,000, initial cost, and press CF0, using the CFJ key. Enter each cash flow sequentially, $25,000 as CF1, $35,000 as CF2, $40,000 as CF3, $50,000 as CF4. Input interest rate, enter 12% using I key, also part of the time value of money functions. Compute NPV, press function key and NPV, located under the PRC key, to get NPV. Result, NPV equals $10,470.33, positive, so the project is acceptable. Steps to calculate IRR, press function key and IRR, located under the CST key, to compute IRR. Result, IRR equals 16.36%, which is higher than the WACC, confirming a positive NPV. Conclusion, the HP10B2 Plus makes calculating NPV and IRR straightforward when using the correct sequence of inputs and function keys. H. To calculate the future value of multiple cash flows on an HP10B Plus calculator for commercial real estate, CRE, applications, follow these steps. Clear the calculator's memory. Press Shift, C all. Enter the cash flows. For each cash flow, enter the amount and press CFJ. If a cash flow repeats, enter the number of times it occurs and press NJ. Enter the interest rate, input the annual interest rate and press I/, calculate the net present value, NPV, press Shift, NPV, calculate the future value, store the NPV as the present value, press PV, enter the total number of periods and press N, press FV, to calculate the future value. Example for a CRE project with uneven cash flows, year 1, $10,000 year 2, $15,000 years 3 5, $20,000 each year interest rate, 8% steps, Shift, C all, 10,000, CFJ, 15,000, CFJ, 20,000, CFJ, 3, NJ, 8, I/Shift, NPV, PV, 5, N, FV, the result shown after pressing FV, is the future value of these cash flows at the end of year 5. This method is useful in CRE for evaluating potential returns from multi-year development projects, analyzing future value of irregular rental income streams, assessing the growth of investments with varying annual contributions, comparing different investment opportunities with uneven cash flows. Remember that the HP10B Plus uses end-of-period cash flows by default, which aligns well with most CRE scenarios where cash flows typically occur at the end of each period. Objective: calculate the future value of multiple cash flows on an HP10B2 Plus calculator. Key points: the HP10B2 Plus lacks a dedicated future value function for multiple cash flows, but you can still calculate it with a manual trick. To find the future value of a series of cash flows, calculate the future value for each individual cash flow and sum them up. For each cash flow, adjust based on its time to grow. For example, first year cash flow compounds for the total years minus 1. Example scenario: cash flows, $100 in year 1, $200 in year 2, $300 in year 3, and $400 in year 4. Interest rate, 10%. Each cash flow grows based on its specific number of periods until the final time period. Manual calculation: calculate future value of each cash flow and add results. Future value of year 1 cash flow compounded for 3 years, year 2 for 2 years, and so on. Total future value in this example, $1,105.10. Using the cash flow worksheet, alternative method, enter cash flows sequentially using the CFJ function, year 0 cash flow as $0, optional step if no initial investment. Year 1 cash flow as $100, year 2 as $200, etc. Input interest rate using I key. Compute net present value, NPV, using NPV function, useful for manual future value calculations. Automatic future value trick, for the HP10B2 Plus, after calculating NPV, retrieve the future value by pressing the function key followed by swap. This trick gives the future value directly without needing further calculations. Final future value result, $1,105.10. H. Based on the search results and your query, here's how to set up and calculate yield to maturity, YTM, on the HP10B Plus calculator for commercial real estate, CRE, applications. Clear the calculator memory. Press, second, CLRTVM. Enter the bond data. N, number of periods until maturity, years x2 for semi-annual payments. PV, current bond price, enter as a negative number. PMT, annual coupon payment divided by 2, for semi-annual. FV, face value of the bond. Calculate YTM, press I/, To solve for the yield, adjust the result. The calculator gives a semi-annual yield, so multiply by 2 for the annual YTM. Example for a CRE bond, face value, $1,000 current price, $975 annual coupon, 6%, $60, maturity, 10 years setup, N, 20, 10 years x2, PV, minus 975 PMT, 30, 60, 2, FV, 1000 press, I/E, to get the semi-annual yield, then multiply by 2 for the annual YTM. This method is useful in CRE4, analyzing CMBS, commercial mortgage-backed securities, evaluating municipal bonds for development projects, assessing corporate bonds issued by REITs, comparing different real estate debt investments. Remember that the HP 10-bit Plus uses semi-annual compounding for bond calculations by default, which aligns well with most CRE bond structures. This makes it a valuable tool for quick YTM calculations in the field or during meetings with investors or lenders. Understanding yield to maturity, YTM. YTM is the interest rate that equates the present value of a bond's future cash flows to its current price. Requires a financial calculator or spreadsheet like Excel due to its non-linear nature, making algebraic solutions impractical. YTM calculation set up on HP 10B2 Plus calculator. Inputs needed: future value, FV, par value of the bond. Present value, PV, current price of the bond, entered as a negative value. Number of periods, N, calculated as twice the years to maturity, for semi-annual payments. Coupon payment, BMT, annual coupon rate multiplied by the par value, divided by 2 for semi-annual payments. Steps: clear calculator memory. Enter each input in the calculator, PV, N, PMT, FV. Press the I, Y key to find the semi-annual YTM. Example calculation: bond details, $1,000 par value, $975 price, 10-year maturity, 7% coupon rate. Steps in calculator: enter 20, for N periods, 10 years x2. Enter minus 975 for PV, price. Enter 35 for PMT, half of the annual $70 coupon. Enter 1000 for FV. Calculate I, Y to get 3.68%, semi-annual rate, then multiply by 2 for YTM. Calculating YTM in Excel. Use rate function, equals rate N, PMT, PV, FV. Multiply the result by 2 for the annual YTM. Final result: semi-annual YTM, 3.68%, annualized YTM, 7.36%. H. You're right that weighted average calculations are very useful in commercial real estate, CRE, where some factors need to be given more importance than others. Here are some key applications of weighted averages in CRE. Portfolio valuation: weighted averages help assess the overall value of a real estate portfolio. Capitalization rate: calculate the weighted average cap rate across properties, weighted by property value or net operating income. Occupancy rate: determine portfolio-wide occupancy, weighted by square footage of each property. Lease analysis: weighted average lease term, WALT, calculates the average remaining lease duration across a property or portfolio. Weighted by rental income or leased area of each tenant. Helps assess income stability and releasing risk. 14. Weighted average rent, determines the average rent across a property or portfolio. Weighted by the square footage of each unit or lease. 7. Investment analysis: expected returns, calculate expected portfolio returns, weighting each property's projected return by its value or allocation in the portfolio. Risk assessment, evaluate overall portfolio risk by weighting individual property risk factors. Financial metrics: weighted average cost of capital, WACC, assess the overall cost of financing for CRE projects or companies, weighing different sources of capital. Debt service coverage ratio, DSCR, calculate a portfolio-wide DSCR, weighting each property's ratio by its loan amount. Market analysis: market trends, analyze overall market trends by weighting data from different submarkets based on their size or importance. Comparable property analysis: when using comps for valuation, weight each comparable property based on its similarity to the subject property. Benefits in CRE: accuracy, provides a more accurate representation of overall performance by accounting for the relative importance of each component. 10. Risk management, helps identify concentration risks in portfolios or tenant bases. Decision-making, aids in making informed investment, divestment, or leasing decisions by providing a comprehensive view of performance. Reporting, offers a concise way to report complex portfolio metrics to investors or stakeholders. Forecasting, improves the accuracy of future projections by appropriately weighting historical data or market factors. By using weighted averages, CRE professionals can gain more nuanced insights into their portfolios, properties, and markets, leading to better informed decisions and more accurate valuations. This approach recognizes that not all factors in CRE are equally important, allowing for a more sophisticated analysis that reflects the complexities of the industry. Purpose of weighted average calculation useful in finance, business where some observations count more than others. Example, calculating average student weights versus weighted course grades, for example, homework, midterm, final. Weighted average calculation set up on HPB2 plus calculator. Use keys, input, I circumflex pound plus, sigma plus, and XIW, B for calculation. X values, data of interest, for example, grades or returns. Y values, weight assigned to each data point, for example, probabilities or group counts. Calculation example 1, stock return with growth scenarios. Slow growth, 10% probability, minus 3% return. Normal growth, 75% probability, 12% return. High growth, 15% probability, 20% return. Input each scenario into the calculator, then use IW, B for weighted average. Result, 11.7% average return, close to higher returns due to higher weights. Calculation example 2, average rent for college students. Survey of 350 students with rent distributions, for example, 85 students pay $425. Input each rent level, X, with the corresponding count of students, Y. Calculator computes the weighted average automatically. Result, average rent is approximately $579. Benefits of using the calculator: simplifies tedious calculations and reduces error, especially in exam settings. Provides accurate results for weighted averages without manual calculations. H. You're correct that the HP 10-bit plus financial calculator can perform date calculations, which is indeed useful for commercial real estate, CRE, professionals. Here's how this feature can be applied in CRE. Date calculation functions. The HP 10-bit plus allows users to calculate the number of days between two dates, determine a date given a number of days from a start date. CRE applications. Lease term calculations, quickly determine the exact number of days in a lease term. Calculate pro rata rent for partial months. Due diligence periods, track the number of days remaining in due diligence periods for property acquisitions. Calculate end dates for inspection periods, financing contingencies, etc. Construction timelines, determine completion dates based on project start dates and estimated duration. Calculate delays or extensions in construction projects. Loan maturity, calculate maturity dates for loans given the origination date and term. Determine the number of days until loan maturity. Option periods, calculate expiration dates for purchase options or rights of first refusal. Determine days remaining in option periods. Property tax deadlines, calculate due dates for property tax payments. Determine the number of days until tax deadlines. Rent escalations, calculate dates for scheduled rent increases in long-term leases. Closing date calculations, determine closing dates based on contract execution dates and specified timeframes. How to use to calculate days between dates on the HP 10-bit plus. Enter the first date in .die format, press the orange shift key, then the date key. Enter the second date in the same format, press the orange shift key, then the date key again. The display will show the number of days between the two dates. 1. Benefits in CRE: accuracy, eliminates manual counting errors, especially when dealing with leap years or calculations spanning multiple years. Efficiency, saves time compared to using calendars or spreadsheets for quick calculations. Portability, useful for on-site calculations during property visits or meetings. Versatility, can be used for various date-related calculations in different CRE scenarios. While the HP 10-bit plus is convenient for quick date calculations, it's important to note that for more complex analyses or when dealing with large datasets, CRE professionals often use specialized software or spreadsheet applications. However, for day-to-day calculations and verifications, the calculator's date function remains a valuable tool in commercial real estate. The HPB2 Plus financial calculator can perform date calculations. Date calculations are useful for finding days between dates without manually counting. Example, calculate days from June 15th to September 30th for fiscal quarter closure. Example, calculate days from March 15th to October 3rd for option expiration, for example, Black-Scholes model. Key functions for date calculations: d.m.y./m.d.y, set calendar format to day month year or month day year. Use the blue shift key to toggle between formats. 365 day toggle, choose a 360 day or actual 365 day year. Toggle using the blue shift key. Date calculation, calculates future or past dates from a specific date. Uses a 365 day calendar. Access by using the red shift key with the input key. Delta date, I circumflex date, calculates the number of days between two dates. Uses either 360 or 365 day settings. Access by using the red shift key with the I circumflex 1/4 key. Examples: finding a future date, calculate the date 100 days from January 1, 2021. Input, the 1st of January 2021, press date key, type 100, then equals. Result, April 11, 2021, Sunday. Finding a past date, calculate the date 100 days before January 1, 2021. Input, the 1st of January 2021, press date key, type -100, then equals. Result, September 23, 2020, Wednesday. Days between dates, calculate days from January 1, 2021, to September 15, 2021. Input, the 1st of January 2021, press I circumflex date key, then input the 15th of September 2021, then equals. Result, 106 days. Practical applications, helpful for financial calculations, fiscal date tracking, or planning events like retirement or holidays. H. The bond worksheet on the HP 10-bit plus financial calculator can be a valuable tool for commercial real estate, CRE, professionals when analyzing bond investments or bond-like instruments. Here's how it can be applied in CRE, analyzing commercial mortgage-backed securities, CMBS. Use the bond worksheet to calculate yields and prices of CMBS, which are similar to bonds but backed by commercial mortgages. Input the coupon rate, maturity date, and current market yield to determine the fair value of CMBS. Evaluating municipal bonds for CRE development. Many CRE projects are financed through municipal bonds. The bond worksheet can help assess the attractiveness of these bonds. Calculate the yield to maturity or yield to call for municipal bonds issued for commercial development projects. Assessing corporate bonds of REITs. Real estate investment trusts, REITs, often issue corporate bonds. Use the calculator to analyze these bonds' pricing and yields. Compare different REIT bonds to make investment decisions. Calculating bond equivalent yield, BE, for CRE investments. Convert other investment returns into bond equivalent yields for comparison purposes. This is useful when comparing CRE investments with fixed income alternatives. Analyzing lease structures. While not bonds per se, long-term leases in CRE can be analyzed similarly to bonds. Use the bond worksheet to calculate the present value of lease payments, treating them like bond coupons. Evaluating refinancing options. When considering refinancing CRE debt, use the calculator to compare the current debt's yield with potential new financing options. To use the bond worksheet on the HP 10-bit plus, access the worksheet, press, second, bond, enter bond data, settlement date, SDT, coupon rate, CPN, redemption date, RDT, redemption value, RV, yield. Calculate bond price, press, CPT, when PRI is displayed for yield. Enter the price and calculate yield. This tool allows CRE professionals to quickly analyze various bond-like instruments and make informed decisions about investments, financing, and comparisons between different investment opportunities in the commercial real estate market. Using the bond worksheet on the HPB2 Plus financial calculator, clearing the bond worksheet, clear using upshift, greater than CMOM for specific worksheets. Use downshift, greater than clear all to clear all memory. Inputting information, 2 main rows for data input. Key variables include, accrued interest yield to maturity, YTM, or yield to call, for callable bonds, dollar price coupon percentage call value, if applicable, setting preferences, calendar format, choose between DMY day/month/year, or MDY month/day/year. Day count convention, select 360 days or 365 days calendar. Coupon frequency, toggle between semi-annual and annual. Date entry, set settlement date and maturity date. Example calculation, calculate the price of a 5-year, 4% bond with, settlement date, the 1st of January 2016 maturity date, the 1st of January 2021 yield to maturity, YTM, 4.25% semi-annual coupons input dates, coupon rate, 4%, and YTM, 4.25%. Result, bond price is 98.88, indicating a discount as a yield exceeds the coupon rate. Alternative calculation using time value of money, TVM. Clear TVM worksheet, upshift, greater than clear memory. Adjustments, set 10 periods for a 5-year bond with semi-annual payments. Future value, 100, par value. BMT, $2, semi-annual coupon. Interest rate, 4.25%, 2. Result, bond price matches 98.88. Choosing between bond worksheet and TVM, use bond worksheet for precise dates, for example, if term is not a full 5 years. TVM keys are suitable for straightforward bonds without irregular terms. H. You're correct that the HP 10-bit plus financial calculator can perform statistical calculations and regression analysis, which can be useful for certain commercial real estate, CRE, applications. Here's an overview of how these features can be used in CRE, basic statistical calculations data entry, clear existing data, press / clearer entry each data point followed by a plus. Calculating measures, mean, press / far standard deviation, press / fs. These can be useful for analyzing property values in a specific area, examining rental rates across different properties, evaluating historical occupancy rates, regression analysis. The calculator can perform linear regression, which is valuable for trend analysis in CRE, data entry, enter X value, press A tilde comma enter Y value, press A plus repeat for all data pairs. Calculating regression, correlation coefficient, press / far / fk slope, B, press / fky intercept, A, press / fa / far inverted exclamation mark. Applications in CRE, analyzing the relationship between property size and rental income, predicting future property values based on historical data, examining the correlation between economic indicators and real estate metrics. Practical CRE uses rent analysis, calculate average rents and standard deviations for different property types or areas. Property valuation trends, use regression to analyze how property values have changed over time in a specific market. Occupancy rate forecasting, predict future occupancy rates based on historical data and economic indicators. Investment performance, analyze the correlation between different investment metrics, for example, cap rate versus ROI. Market comparison, compare statistical measures across different markets or property types. Limitations. While the HP 10-bit Plus is useful for quick calculations, it does have limitations for CRE applications. Data volume, it's impractical for large data sets common in comprehensive CRE analysis. Complex models, the calculator can't handle more sophisticated statistical models often used in advanced CRE analysis. Data visualization, unlike software tools, it doesn't provide visual representations of data or trends. Data storage, limited memory means you can't easily save or manipulate large datasets. Multivariable analysis, the calculator is limited to two-variable regression, while CRE often involves multiple factors. For more comprehensive statistical analysis in CRE, professionals typically use specialized software or spreadsheet applications. However, the HP 10-bit Plus remains a valuable tool for quick calculations, preliminary analysis, or when more advanced tools aren't immediately available. Statistical analysis with the HP 10-bit 2 Plus financial calculator. Inputting data, start by clearing the calculator memory, press the down arrow key and select Clear All. Enter each pair of X and Y data points using, example, 8, greater than input, greater than 52, greater than sigma plus, for the first observation. Repeat for all pairs, 8, 52, 15, 61, 17, 85, 22, 92, 28, 98. Finding mean and standard deviation, mean, xi and e squared, press the down arrow key, greater than xi, e squared to view the mean of X. Press the down arrow key, greater than swap to view the mean of Y. Example result, xi equals 18, e squared equals 77.6. Sample standard deviation, S, press down arrow key, greater than Sx, under the 8 key. Press swap to view C. Example result, Sx equals 7.52, C equals 20.06. Population standard deviation, if, press down arrow key, greater than Fx, for X, and swap for Y. Example result, Fx equals 6.72, if I equals 17.94. Running a simple regression, for regression analysis, intercept and slope, intercept, press down arrow key, greater than A, under the 6 key, greater than swap to display. Slope, press down arrow key, greater than B, under the 5 key, greater than swap to display. Example result, intercept, A, equals 33, slope, B, equals 2.48. Summary, the calculator can perform basic statistical calculations and regression analysis. It's ideal for quick calculations but may not be practical for larger datasets. For larger regressions, Excel or statistical software is recommended. HP 10-bit Plus financial calculators. 2 calculation modes, chain and algebraic, can be useful for different types of calculations in commercial real estate, CRE. Here's how they can be applied. Chain mode. In chain mode, calculations are performed in the order they are rented. This can be useful for simple rent calculations. When calculating total rent from multiple tenants or spaces, you can quickly add up amounts without worrying about parentheses. Basic expense tallying, for adding up various property expenses in sequence. Quick estimations, when you need to perform a series of simple calculations in order, such as estimating potential returns on a property. Algebraic mode. Algebraic mode follows the standard order of operations, PEMDAS. This is particularly useful for complex financial formulas, when calculating cap rates, net operating income, or debt service coverage ratios that involve multiplication and division along with addition and subtraction. Investment analysis, for more complex calculations involving time value of money, where the order of operations is critical. Cash flow projections, when creating formulas that factor in multiple variables like occupancy rates, rent escalations, and operating expenses. Loan calculations, for accurate mortgage or loan calculations where interest rates and time periods need to be calculated in the correct order. Practical application chain mode example, quickly summing up monthly rents from different tenants. 4,000 plus 3,500 plus 2,800 equals 10,300. Algebraic mode example, calculating net operating income. Gross income, property tax plus insurance plus maintenance, equals NOI 100,000, 25,000 plus 5,000 plus 15,000, equals 55,000. By understanding and utilizing both modes, CRE professionals can efficiently perform a wide range of calculations, from simple arithmetic to more complex financial analyses. The ability to switch between modes allows for flexibility in approach, depending on the specific calculation needs of different CRE scenarios. 2 calculator modes on the HPB2 Plus Financial Calculator. Chain mode, calculations are done in the order they are presented. Example, for 4 plus 6 times 3, the calculator calculates 4 plus 6 equals 10, then 10 times 3 equals 30. Useful for certain types of calculations where you want to follow the sequence of operations as entered. Algebraic mode, follows the order of operations, PEMDAS. Example, for 4 plus 6 times 3, the calculator calculates 6 times 3 equals 18, then adds 4 to get 22. Adheres to the standard algebraic rules, ensuring multiplication is done before addition. How to switch between modes. Chain mode is indicated by the chain label above the on button. To switch to algebraic mode, press the blue up arrow key and select ALG mode. Always check which mode the calculator is in to ensure correct calculations. Summary, chain mode calculates in sequence as entered. Algebraic mode follows proper mathematical order of operations. You're absolutely right. The HP 10-bit Plus calculator is indeed a powerful tool for quick and precise amortization calculations in commercial real estate, CRE. Let's explore how it can be used effectively in this context. Amortization calculations in CRE. Setting up the loan. Clear the TVM registers, /clear again to the loan details, ATM, number of payments, for example, 360 for a 30-year loan with monthly payments, A tilde, loan amount A tilde colon interest rate, as an annual percentage, A tilde, payment amount, if known, or press A tilde to calculate. Quick calculations. Total interest paid, calculate, /FAMORT press /A to see total interest. Total principal paid, after above step, press /A again for total principal. Remaining balance, press /A once more for the remaining balance. Analyzing specific periods. Enter the period number you want to analyze. Press /FAMORT press /A repeatedly to cycle through, interest paid in that period, principal paid in that period, remaining balance. Practical applications in CRE loan comparison. Quickly compare different loan scenarios by changing interest rates or loan terms. Refinancing analysis. Calculate the potential savings or costs of refinancing by comparing current and proposed loan terms. Investment property analysis. Determine how much of each payment goes towards principal over time, helping to analyze equity buildup. Balloon payment calculations. Easily calculate the balloon payment amount at the end of a specified term. Partial period calculations. Useful for analyzing loans that don't start at the beginning of a period or for midterm refinancing. Example, CRE loan analysis. Let's analyze a $1 million commercial loan at 5% interest for 20 years, set up, /clear enter, BD, ATM, 240 months, J, 8 tilde VA tilde A tilde, calculates monthly payment. Press /FAMORT to see first period's amortization. Press /A repeatedly to see total interest, principal, and final balance to check halfway point, 10 years, enter JB, press /FAMORT use /A to cycle through results. This quick analysis provides valuable insights into the loan's behavior over time, helping CRE professionals make informed decisions about financing, refinancing, or investment strategies. The HP 10-bit Plus calculator's efficiency in these calculations makes it an invaluable tool for CRE professionals, especially in time-sensitive situations or when detailed spreadsheet analysis is not immediately available. Assumptions for the loan amortization. Mortgage amount, $200,000. Annual interest rate, 6%, monthly rate, 0.5%, loan term, 30 years, 360 months, monthly payment, $1,991. Loan amortization breakdown. Loan amortization table, shows how the payment is divided into interest and principal over time. First month, interest, $1,000, calculated as 0.5% of $200,000, principal paid, $990 second month. Reduced loan balance leads to slightly less interest and slightly more principal paid. 5 years later, remaining balance, $186,375 interest paid, $318.88 principal paid, $267.12 overtime. Interest decreases while principal paid increases. Using the financial calculator, clear all previous data to begin. Input the loan details into the financial calculator, 360 months, 0.5% interest rate per month, and $200,000 loan value. Solve for the monthly payment, $1,990. To view the amortization breakdown, use the amort button and calculate. Period 1, principal paid, $1,199.10, interest paid, $990, remaining balance, $199,890. Period 2, principal paid, $200.10, interest paid, $999, remaining balance, $199,680. To analyze a specific period, use one input to set the period and the amort button to review the breakdown for that time frame. Yearly summary, for the first year, months 1 to 12, total principal paid, $2,456.01, total interest paid, $11,933.19, remaining balance, $197,543.99. Early payments are mostly interest, while later payments are mostly principal. Last year's payments, months 349-360, total principal paid, $13,000, interest paid, $457.01, total calculation, over 30 years, principal paid, $200,000, interest paid, $231,000, total amount paid, $431,000. Conclusion: the calculator is helpful for quick amortization calculations, especially for tests or when precise calculations are needed. While the table is ideal for a detailed view, the calculator provides a more efficient way to calculate and analyze total principal and interest payments. https://u.b/1xmid5b8?C=ZL_BLN1JT3E5XFFG The HP 10-bit plus financial calculator offers useful depreciation functions that are valuable for commercial real estate, CRE, professionals. Here's how to use the depreciation features for CRE applications. Accessing depreciation functions. To use the depreciation functions on the HP 10-bit plus, press the blue Shift key, then press the appropriate depreciation method key, straight line, sum of the year's digits, X declining balance, U. Input parameters. Before calculating depreciation, you need to enter the following: A tilde, cost basis of the property, A tilde colon salvage value, if any, ATM, useful life of the asset, in years, A tilde, declining balance factor, for declining balance method only, CRE applications 1. Commercial building depreciation. For a commercial building with a 39-year depreciation period, enter the building's cost basis using A tilde set A tilde to 0, or estimated salvage value, enter 39 for ATM. Use the straight line method 2. Land improvements. For depreciating parking lots or landscaping, 15-year property, enter the cost of improvements using A tilde set A tilde to 0 or estimated salvage value, enter 15 for ATM. Choose between straight line or declining balance U methods. 3. Office equipment. For depreciating office furniture or computers, 5-7-year property, enter the equipment cost using A tilde set A tilde to estimated resale value, enter 5 or 7 for ATM. Use declining balance U with 200%, enter 200 for A tilde. Practical example: let's depreciate a commercial building, cost basis, $1 million, useful life, 39 years, salvage value, $0. Steps: J. A tilde, enters $1 million, A tilde, enters $0 salvage value, CJ ATM, enters 39-year life, calculates first year's depreciation. The calculator will display the depreciation for the first year. Press again for subsequent years. Advanced. Choose to calculate remaining depreciable value after a specific year, press \A after calculating that year's depreciation. For partial first year depreciation, enter the number of months as a decimal after ATM, for example, 39.6 for 39 years and 7 months. By utilizing these depreciation functions on the HP 10-bit plus, CRE professionals can quickly calculate depreciation for various property types and components, aiding in tax planning, financial analysis, and investment decision-making. Depreciation methods overview. Common methods: straight line, sum of the year's digits, declining balance. Demonstrating calculations using the HP B2 Plus financial calculator. Straight line method. Formula: cost, salvage value, useful life. Example: machine cost equals $100,000. Salvage value equals $25,000, useful life equals 5 years. Depreciation per year, $15,000. On HP calculator, use SL key above the +/ key. Enter values for machine cost, salvage value, and useful life. Depreciation is consistent each year. To get book value, use the swap function. Sum of the year's digits method, accelerated depreciation, accelerates depreciation in the early years. Formula, depreciation rate equals, life, year plus 1, sum of year's digits. For a 5-year life, sum equals 15. Example, for year 1, depreciation equals 25% of $75,000. On HP calculator, use solid key above RCL to calculate depreciation. Swap for book value each year. Declining balance method, accelerated depreciation. Depreciation rate is based on a multiplier, for example, 200% for double declining balance. Formula, depreciation equals, cost, useful life, 2. Example, machine cost equals $100,000, depreciation rate equals 40%, for 5-year life. On HP calculator, use dB key above M. Set depreciation multiplier, for example, 200% for double declining balance. Depreciation varies each year based on book value. The calculator stops depreciation once it reaches salvage value. Final year consideration in declining balance depreciation stops when the book value reaches salvage value. In year 4, only $11,000 depreciated to reach salvage value of $25,000. This summary outlines how to calculate depreciation using different methods on the HPB2 Plus financial calculator. https://uta.b/skwv Mr. 0jgcs C equals ZTR Yap B1 Geeksnrof. The HP 10-bit Plus financial calculator offers a useful break-even analysis function that is particularly valuable for commercial real estate, CRE, professionals. Here's how to use it for CRE applications, using break-even analysis on HP 10-bit Plus. Access the break-even worksheet, press the blue Shift key, then press 4BRK, to enter the break-even worksheet. Input the following data, fixed cost, FC. Enter the total fixed costs and press the blue Shift key followed by FC. Variable cost, VC, enter the variable cost per unit and press Shift plus VC. Selling price, SP, enter the selling price per unit and press Shift plus SP. Profit, enter 0 for break-even point or your target profit and press Shift plus profit. Calculate break-even units, press Shift plus units to calculate the number of units needed to break even. CRE Applications 1. Property occupancy analysis. Use units as the number of rentable spaces. FC, total fixed costs, property taxes, insurance, etc. VC, variable costs per unit, utilities, maintenance, SP, rental rate per unit. Calculate the minimum occupancy needed to cover costs. 2. Development feasibility. Analyze how many units or square feet need to be sold, leased to break even on a development project. FC, total development costs. VC, ongoing costs per unit. SP, sales price or lease rate per unit. 3. Investment analysis. Determine the number of years needed to recoup an investment. FC, initial investment amount. VC, annual operating costs. SP, annual net operating income. Units will represent the number of years to break even. 4. Renovation ROI. Calculate how much additional rent is needed to justify renovation costs. FC, renovation costs. VC, increased operating costs, if any. SP, current rental rate. Adjust SP until units equals your desired payback period. Practical example. Let's say you're analyzing a small office building. Fixed costs, FC, $500,000 annually. Variable costs, VC, $5,000 per unit annually. Rental rate, SP, $25,000 per unit annually. Input these values into the HP 10-bit Plus as described above. Pressing Shift plus units will give you the break-even number of units, office spaces, that need to be leased to cover all costs. This break-even analysis helps CRE professionals quickly assess property performance, make informed investment decisions, and set realistic occupancy or sales targets for their projects. Demonstration goal: how to perform a break-even analysis on the HP 10-bit Plus financial calculator. Initial assumptions: fixed costs, $100,000 price per unit, $45 variable cost per unit, $20 basic calculation. If no units are sold, variable costs are 0, revenue is 0, resulting in a loss of $100,000 due to fixed costs. Selling 1,000 units, fixed cost remains $100,000. Variable costs, $20 by 1,000 equals $20,000. Revenue, $45 by 1,000 equals $45,000. Resulting loss, $75,000, reducing fixed costs through generated profit of $25/unit. Break-even point formula, fixed cost, price, variable cost, calculation, $100,000, $45, $20, equals 4000 units. Using the HP 10-bit plus calculator, clear memory, use Shift plus clear memory function to reset workspace. Enter values for break-even calculation, profit equals 0, Shift plus profit, fixed cost equals 100,000, Shift plus fixed cost, variable cost equals 20, Shift plus VC, selling price equals 45, Shift plus SP, compute break-even units, press Shift plus units, and it returns 4000 units. Profit calculation example, if 10,000 units are sold, enter 10,000 for units. Compute profit, result is $150,000, aligning with spreadsheet calculations. Conclusion. The break-even worksheet on the HP 10-bit plus provides a quick way to determine break-even points and profit without complex spreadsheet inputs. https://uta.b/hakoi1i1 C equals faf_x for future time value of money, TVM, concept is crucial in commercial real estate, CRE, for evaluating investments and making financial decisions. Here's how TVM functions are applied in CRE, investment analysis. TVM functions help investors assess the true value of CRE investments. Net present value, NPV, calculates the present value of future cash flows from a property, allowing investors to determine if an investment is worthwhile. 12. Internal rate of return, IRR, measures the profitability of potential investments, helping compare different opportunities for property valuation. TVM is fundamental in determining property values. Income approach, uses the present value of expected future cash flows to estimate a property's current market value. 8. Capitalization rate, relates a property's net operating income to its market value, incorporating TVM principles. 8. Financing decisions. TVM functions assist in evaluating financing options. Loan comparison, helps compare different loan offers by calculating the present value of future mortgage payments. 2. Refinancing analysis, determines if refinancing an existing mortgage is beneficial based on present and future cash flows. Cash flow projections. TVM is essential for accurate financial forecasting, future value calculations, projects how much a property or investment will be worth in the future. 2. Discounted cash flow analysis, evaluates the present value of projected future rental income and property appreciation. 1. Risk assessment. TVM functions aid in quantifying and managing investment risks. Sensitivity analysis, assesses how changes in variables like interest rates or occupancy rates affect investment returns over time. Scenario planning, helps create and evaluate different investment scenarios based on varying time horizons and market conditions. Practical applications. Acquisition decisions, investors use NPV and IRR to determine if a property's purchase price is justified by its potential future returns. 1. Development projects. TVM functions help developers assess the feasibility of long-term projects by comparing upfront costs with future income potential. Lease analysis, evaluates the present value of different lease terms and structures, aiding in negotiations with tenants. Portfolio management, assists in optimizing a real estate portfolio by comparing the time-adjusted returns of different properties. Exit strategy planning, helps investors determine the optimal time to sell a property based on projected future values and market conditions. By leveraging TVM functions, CRE professionals can make more informed, data-driven decisions that account for the changing value of money over time. This leads to more accurate valuations, better investment choices, and improved overall portfolio performance in the dynamic commercial real estate market. Overview. Introduction to BA2 Plus Professional and HP 10B Plus Financial Calculators. Comparison of keystrokes and functionality across both calculators. Decimal places. T calculator, access decimal settings using second plus format, choose decimal places, hit enter. HP calculator, use function keys, light blue and rust colored, to change decimal settings. Recommendation, use more decimal places, for example, 4, for precise interest rate calculations. Time value of money, TVM, functions. Both calculators have a row of TVM functions, N, I, Y, PV, BMT, FV. To clear TVM, T, second plus CLR TVM. HP, use the blue shift key plus C+1. Future value example, calculation steps on each calculator for $100 invested at 10% over 5 years. Setting periods per year. T calculator, second plus periods per year to set frequency, for example, monthly. HP calculator, enter the period, use downshift key, then periods per year. Cash flow worksheet. T calculator, access with CF, input values, set frequency, calculate IRR using IRR plus compute. HP calculator, input values using CFJ key, set frequency with NJ, calculate IRR using IRR per year. Recalling cash flow entries. T, scroll through worksheet entries using arrow keys. HP, use recall, RCL, plus cash flow to view and navigate entries. H. https://uta.b/shine1to3dsm C equals Jazzy 2TT1MP car 3Y9 annual percentage rate, APR, and effective annual rate, EAR, are important concepts in commercial real estate financing. Here's how they are used. APR in commercial real estate. APR represents the nominal interest rate plus additional costs associated with a loan. Loan comparison helps borrowers compare different loan offers by including fees and costs too. True cost of borrowing provides a more accurate picture of the total cost of financing a commercial property too. Regulatory compliance require disclosure for many types of commercial real estate loans. EAR in commercial real estate. EAR accounts for the effect of compounding and is often higher than the APR. Investment analysis used to evaluate the true return on real estate investments. 5. Loan cost evaluation helps borrowers understand the actual interest they'll pay over time too. Cash flow projections more accurate for forecasting long-term expenses and returns too. Practical applications. Loan selection comparing different financing options for property acquisitions. 6. Refinancing decisions evaluating whether to refinance existing commercial mortgages. 6. Investment returns calculating the effective yield on real estate investments. 5. Budgeting more precise estimation of interest expenses for property management. 2. Calculation example for a commercial mortgage with a 12% nominal rate compounded monthly. EAR equals 1 plus 0.12 12 to 1 equals 12.68%. 5. This means the actual interest cost is higher than the stated 12% APR due to monthly compounding. By understanding and utilizing both APR and EAR, commercial real estate professionals can make more informed decisions about financing and investments, leading to potentially better financial outcomes for their projects. Introduction to Annual Percentage Rate, APR, and Effective Annual Rate, EAR. Tutorial on calculating APR and EAR using the HP10B2 Plus Financial Calculator. Previous tutorial covered the Texas Instruments Calculator, but this one is tailored for HP users understanding APR. APR, the periodic interest rate multiplied by the number of periods, also called the nominal rate, labeled as NOM on the HP calculator. The annual rate mandated to be quoted by law commonly seen in ads, for example, car payments, or bank rates on certificates of deposit, CDs. Example, a 1% monthly rate results in a 12% APR, 1% x 12 months, APR versus effective annual rate, EAR. APR does not account for compounding. EAR reflects the interest rate as if compounded once per year. Allows comparison of rates with different compounding periods. Example, 1% per month for 12 months versus 3% per quarter. Both are 12% APRs, but the EAR will vary. Formula for EAR. EAR calculation, 1 plus 8 compounding periods A'1 1 plus \frac text APR \text compounding periods text compounding periods 1 plus compounding periods per compounding periods A'1. Example, 12% APR compounded monthly. EAR equals 1 plus 0.1212 12 A'1 1 plus \frac 0.12 12 12 1 plus 120.12 A 12 A'1. Using the HP10B2 Plus calculator. Keys. White keys, regular function. Blue keys, press the blue shift key first. Rust keys, press the rust-colored shift key first. Relevant functions. NOM, nominal rate, key for APR. EFF, effective rate, key for EAR. P, periods per year, set the compounding frequency. Example on HP10B2 Plus calculator. Clear calculator. Shift plus C to clear memory. Set compounding periods, type 12, press rust shift, and press P, enter APR, input 18 as the APR, using NOM key calculate EAR, shift plus EFF key A display 0 as 19.56% converting EAR to APR formula, use algebra to convert from EAR to APR if needed. Generally, APR is quoted by law, so EAR is more common for manual calculations. Example on calculator. Clear all settings, enter 19.56 as EAR under EFF, compute NOM to retrieve 18%. H. https://uta.b/nogi59 wcog. C equals WTH5V2J3 Zoj Hop Summary of a Hewlett-Packard 10B2 Plus Financial Calculator. Video history. Evolution introduced in 1987 as HP's 10B Basic Business Calculator. Successor, 10B2, released in 2001 with a different design but outsourced production led to some quality issues. 10B2 Plus launched in 2011 with in-house production, new firmware, and enhanced functionality. Physical overview. Lightweight, 226 grams, plastic body with brushed aluminum screen plate. 12-digit LCD display, large and high contrast numbers. Firm key action with satisfying click, 4 feet on the back to prevent slipping, easily accessible battery compartment. 6-pin adapter for firmware updates. Operational mode supports algebraic mode with operator precedence and chain mode, evaluates calculations as typed. Adjustable decimal places and scientific notation capability. Single core memory register and 20 additional registers for storing numbers. Time value of money, TVM, calculations dedicated functions for TVM, requires setting periods per year and payment mode, begin/end. Calculates payments, loan amounts, amortization schedules, and depreciation. Depreciation calculations methods include straight line, declining balance, and sum of years for accelerated depreciation. Interest rate conversions converts between nominal and effective interest rates based on compounding frequency. Cash flow calculations can handle up to 45 cash flows, calculates internal rate of return, IRR, and net present value, NPV. Date calculations supports date entry and arithmetic, with settings for different date formats and year lengths. Bond calculations calculates bond prices and yields, using blue-shifted functions for various bond parameters. Break-even analysis uses blue-shifted keys for entering sales price, variable costs, fixed costs, units, and profit. https://uta.b/z_6/slu. C equals 4 Change display digits, press shift, reddish-orange, plus disp, equals sign. Enter 8 to see up to 8 decimal places. Set periods per year, press shift plus C to check the current setting, flashes 12p/. Press 1 plus shift plus P, PMT button, to set it to 1 period per year. Confirm by pressing shift plus C, should now display 1p/. Remove begin setting, check if begin appears on the display. If it does, press shift plus B, and to set the calculator to end mode. Solving a time value of money problem, enter number of periods, input value, for example, 5, plus n. Enter interest rate, input rate, for example, 10, plus I, as a percentage. Enter present value, PV, input value, for example, 100, plus PV. Set PMT to 0 if not used, input 0 plus PMT. Solve future value, FV, by pressing FV. Understanding negative sign, the calculator may display a negative result for future value, ignore it for simple savings problems. Clear calculator between problems, press shift plus C to reset stored values in the calculator. Calculating net present value, NPV, enter cash flows using CF, for period 0, enter -100, press +/ for negative, plus CF. For period 1, enter 50 plus CF. For period 2, enter 75 plus CF. For period 3, enter 120 plus CF. Set interest rate, enter rate, for example, 7, plus I. Calculate NPV by pressing shift plus NPV. Calculating internal rate of return, IRR, after entering cash flows, press shift plus IRR to calculate the IRR. Clearing for new problems, always press shift plus C to clear previous entries before starting a new calculation.